Welcome to FreightWaves Now, Wednesday edition style hump day tip of the cyclical freight cycle. I'm Chad Prevost.
And I'm Emily Zink. We have a jam-packed show for you on this Wednesday. We're talking some recent developments on Wall Street and also talking to you carriers out there. But first, let's look at the housing starts with Anthony Smith.
That's right, Emily. We are talking housing starts, and we have a little bit of a mixed bag for May. We have some downward movement for the latest numbers in May, but as you can see, there has been an upward revision for March and April's numbers. Now, it's a little bit of a mixed bag, as I mentioned, because when you look at housing starts on a month-to-month movement, there is a lot of volatility. So it's important not to get too caught up in 1 month of movement, but look at the overall trend. And when we look at the overall trend, this red line here, the 6-month moving average, we have a little bit of upward movement. So it's going to be very telling when we get next month's June data of what the first half of 2019 looks like overall.
As an economist, why do you care about housing starts?
We care about housing starts because it's very telling for the overall economy. It has a lot of different ties to different industries. When we look at manufacturing, building materials, of course, real estate and banking, things like that. But it also gives you a good idea of what the health of the overall consumer is.
But this isn't telling the entire picture. You were talking about the housing market's a little different than this picture.
Right, and so right now what we're seeing is that there hasn't been that upward movement that we were expecting in housing starts because there have been a little bit of a sluggish start for the first half of 2019. It doesn't quite reflect the environment for the consumers. We have historically low unemployment and we have historically low mortgage rates. And so these two things combined with overall consumer optimism should lead to some upward movement for housing starts going into 2019.
So as you should be looking at the housing starts, but like you said, that's not going to paint the entire picture for the economy right now.
Correct, not painting the entire picture, and right now we're seeing that there's a little bit of an imbalance with the supply of homes on the lower end of the price scale versus the demand there. There's a high demand for these homes, but builders are really limited on getting these homes out there to these consumers that want to buy.
And now we're talking to carriers about the Quincy Market with market analyst Robbie Crossland. Robbie, what do we got?
The man, the myth, the legend, Mr. Chad, thank you for having me on the show.
Great to have you.
We're actually looking at the Quincy, Illinois area. What this is, we're looking at the chart, the top line that has the mountain downcast is the inbound tender volume index, and right now currently it's at about 12.54 index points. However, the inbound tender rejections as a whole is at 6.44, which is actually down quite a bit year over year. And what I want to show you is why I'm bringing you this market, what's making it so hot. And on the next chart that I have coming up here is our outbound tender volume index. Out of Quincy, you can see our white line. Again, this is the total outbound tender market share and index value of 13.42. What's super interesting about it as a whole is the reefer tender rejection market is up 45.81%. That is significant. It's one of the highest rejections in the entire nation right now.
And why did you pick the Quincy Market to examine? It's situated in an interesting position.
It is. It's kind of a central location to St. Louis. You've got Chicago close by.
Kansas City.
Of course, Kansas City. We gotta love our Patrick Mahomes, right? But the reason that I picked it, reefer tender rejection year over year is actually up significantly, over 30%, which is substantial in a market that is supposed to be as loose as it is. And it is very loose, and I'm not trying to say that it's not. But this area right now is actually struggling. So carriers accept all the loads that you can into the greater Quincy area. That way you can leverage that negotiating capability for your loads coming out, whether it be van or reefer. Thanks for tuning in. Make sure and subscribe.
Seth Holm joins us with some financial news. UBS downgraded freight. Seth, what exactly does that mean?
That's right, Emily. Yesterday, UBS out with a big report. They downgraded the trucking and intermodal stocks. Why did they do that? So the main reason is they took a look at the Cass Freight Index for shipments in the U.S. This index has been down 5 straight months since December 2018 over here. And so that indicates a downturn to them. There's been 3 of those since 2000. One right here in 2016, one that pretty much lasted all 3 years from 2007 to 2009 here, and then one from 2001 to 2002. Now, on average, when they took a look at history, these last anywhere from 12 to 19 months. And so right now we're only 5 months into it, which suggests to them that this downturn might last all the way through mid-2020.
Yeah, interesting news here nationally, but internationally, you were talking about some news too.
That's right. So what I have here is a chart of the S&P 500. And the S&P 500 right now is within 1% of an all-time high up here at 2917. Now that's a little unusual because if I told you right now US 10-year bonds are yielding 2.05%, we've got an inverted yield curve again. European bonds, many of them are negative yielding and getting worse. And then European, US, and Chinese economic data has been horrendous. And so typically you wouldn't look at this chart and think, well, the stock market's going to be an all-time high, but we've got some things going on, mainly 3 things. So today the Federal Reserve in the US meets, and we're going to have this thing called minutes, where basically what we're going to try to see is whether or not the Fed's going to cut rates in July. That's been supporting the market. Then yesterday, the head of the EU Central Bank, Mario Draghi, came out. He front-ran the Fed. He said, we're going to cut rates in July, and that angered President Trump. And then thirdly, we've got the G20 meeting next week in Osaka, Japan. We've got Trump and Xi Jinping meeting, and so people have gotten optimistic that we may get a trade deal or a thaw in the Chinese-U.S. relations.
Yeah.
But if we don't get all those 3 things, if the Fed doesn't cut in July, if we don't get a trade deal, this is a very dangerous setup, right? Because we've got the $300 billion in extra Chinese tariffs that are on the horizon here, and we actually just did a paper. Our research team here at FreightWaves just did a paper on everything U.S.-China trade war that's on Sonar now, and you should check it out.
We definitely covered a lot in today's episode of FreightWaves Now, from housing starts all the way to Wall Street. Of course, share the love on our social media channels.
Yeah, Instagram, Twitter, LinkedIn, Facebook. We're here all over the place, ubiquitous. We'd love to share the love with you. Tune in and see you soon. Don't worry, be happy.